buybacks, not just with regard to the companies that do them, but just in general in the market. No matter what happens to the individual stocks, that cash does end up back in investors' hands.
Oh, absolutely. You know, a company has four choices of what to do with their cash. They can invest it organically, they can make M&A activity, they can pay a dividend, or they can buy back stock. Warren Buffett's a huge fan of this, and it means that all remaining shares are that much more valuable, all things being equal.
Absolutely. And he certainly benefited from it in a huge way by having his own stake in Apple go up all the time, even without buying a new share, because Apple's buying back stock from everybody else. The other piece of it is that you can have a buyback authorization, but the company has its own discretion as to whether it goes through with it. Goldman Sachs this week was suggesting that the actual execution of buybacks this year have been running well below last year's pace, even though companies are authorized to buy more. So I wonder if that just means that companies are being more cautious with their cash, and maybe that's not going to be a bigger source of demand right in the here and now for stocks.
No, I think when you're coming off a year, the NASDAQ's down nearly 40%. I think tech companies being conservative is understandable. Two, when we take a long position in a tech stock ourselves, we might buy at 40 and then average dollar cost average down at 30, 20, 15. Most of our biggest winners, the stock was down 60 or 70% at the lowest point, only to come back and make, really good returns. So I wouldn't be surprised at all. They saw what happened to Meta in October. It was an $88 stock, and they were embarrassed by the fact that they had bought at $330 in 2021 and $210 in 2022. And so they got a lot of criticism, and the other tech giants want to avoid that same reaction.
Sure. Now, there's certainly a school of thought that says that initiating or raising a dividend might be the better signal by management to say, look, we believe the profitability is going to be there for a long period of time. It's going to be cash in investors' hands, whether it's, some people don't like the tax implications of that. Do you feel it's relevant how a company returns cash to you?
I don't, except I think paying a dividend does tie your hands a little bit. It does maybe send the wrong signal to the tech crowd that maybe you've matured. I think Microsoft obviously started paying a dividend with Windows, but then reinvented itself through video games. Look at Disney, who cut their dividend during the pandemic and now is being pressured to raise it or to reinitiate it again under Bob Iger. And so I think Google still is a growth company. Meta is still a growth company, and they will be for the next 5 to 10 years. I don't look for them to start a dividend anytime soon.
Yeah, exactly. And some would say that that's a signal of, certainly mature companies, slowing growth, something like that as well. The other piece of the equation is whether the buybacks are just going to offset stock-based compensation that goes to employees. That's a big complaint that people kind of use shareholder cash to buy back stock that's really not reducing the share count, not really raising your stake in the company. Is that something that you'd be mindful of in terms of which companies are being a little bit more generous versus less?
Oh, I think so. I think it's good for employee morale. It's good for, if your workers aren't happy, you're going to have some issues at the end of the day. And I think, let's think about why Alphabet is doing this. They've been a very successful company in their 25-year history. And for 19 years being a publicly traded company, this is an $85 IPO.
Yeah.
That's got 2,300%. If it wasn't for the 20-to-1 split in August, this would be a $2,100 stock. So they've been very successful for 25 years. The question is, will they be successful for the next 25?
Yeah, and certainly they don't need that cash to run the business because it is such a good one and so profitable. Although people say Apple's the one that does it right. They reduce the share count, they do it out of free cash flow, and they also do have a dividend. So maybe there's enough to go around for everybody.
Exactly. Apple had the most buybacks last year, $90 billion, and of course Alphabet was second, $70 billion.